Welcome to another episode of the Crypto Hour. Today is Friday, the 25th of April. Now, just a little bit of housekeeping before we start. So I'm going to be away for a few days next week, so there is not going to be a Crypto Hour next week, but I'm going to be back in 2 weeks' time as normal. So remember, the time always stays at 9 a.m. UK. Whatever time it is in your country, so just be sure to adjust for daylight saving time when that happens. Should have happened now for most of the world, so you got no excuses. All right. Now, the first thing I wanted to talk to you about today is another bit of safety and security online. Okay, because I had an example of a member that asked me a question and I want to share it with you without sharing any personal details of the person who actually shared this with me, but I just want to show you so that you're very careful if this thing goes to happen to you. Okay, so let me share my screen. Okay, can you guys see my screen?
Yeah.
Just give me a thumbs up if you can.
Yeah.
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 Perfect. Okay, somebody told me, oh, we received these. Somebody sent me this like 200,000 USDT. Okay, and so I said, okay, before you do anything, before you touch them, just like send me the transaction ID. In this case, they send me the address where these tokens are. So the first thing I do, you go on to, in this case, it was like on the Ethereum network. Okay, so you go onto the blockchain. And this is a Etherscan. It's software that scans the blockchain, so you can have a look on the Ethereum network and other networks as well that you can access through that to actually look at at a certain address or a certain transaction. So in this case, you can see here the address is being blocked out because I don't want to, reveal who this person is they have on their thing. But once I look on the address, and you look at this address is supposed to have 200,000 USDT, and the first clue is in here where you see value is 0. Okay, and then you have a look before it says token holdings. It says 1 token, although the value again is 0. Okay, so there's nothing here. This is the initial screen. You can see there's nothing to see here. But what we can go and do, we can go and have a look at assets to see what assets are in the account. So I'll go on to the next screen. Okay, now we can see that we can see the assets in here. Now, funny enough, on his wallet, this asset, instead of showing like ERC20 token, it showed that USDT. Okay, now although the first thing that gave it away is that it didn't have the USDT logo next to it, it just had this basic Ethereum logo next to it. But because if you create a token, you can give him any name you like. So you could now go and create a token called USDT. It doesn't mean that it's the USDT that you think, like the stable coin. It's just a token, an ERC20 token that you gave it a name of, USDT, or you can call it whatever, James token or whatever else you like. But in this case, on the wallet, it looked like, the name was USDT. So the first thing you can do, if you don't want to, and you can't stop people, if people have your Ethereum address, you can't stop from sending you scam tokens. So you can do that. You can have, probably, if you have a ledger or a Trezor or something like this, you probably have tens of tokens that are worthless that are sent to you because they're scam tokens. Now, the first thing you can do, if you want, you can hide these assets without no value. So there is a slider here that says hide, assets with $0 value. If you slide that through, then you wouldn't say, although the tokens are still there, but you wouldn't see here anymore. But if we go onto, you click onto this token to see what it is. takes you onto this screen. So what do you think this is a good token? This is a fake token. Please exercise caution when interacting with it. Okay, so whenever you have these tokens, you can see the amounts in here. 232,435.27. So they've probably done it so that it looks more real, rather than sending, a kind of like amount like 100,000, 200,000. That seems more real. And see as well here the maximum total supply. So how many? So 3, 6, 9, 12 zeros. Okay, so that's 2 trillion supply in of these particular tokens. 477 holders. So is that likely to be USDT? I think there might be more than 477 people that hold USDT, maybe. But the thing that is important is that don't interact with it. Don't try and send it to another wallet. Don't touch it. Because these are tokens that may take you to another place, may connect into a smart contract, and at the very least, they're phishing tokens. They are designed to take your details out of your wallet and showing people what's in your wallet. So don't interact with it anyway. But another thing you can do now, you can see here on these tabs, it says transfers, information, contract, analytics, and cards. If you click on cards, it takes you, that's something kind of quite interesting. I mean, you could have understood it yourself just by looking at the data, but you can see the vulnerability score, token smell test. I like this one. So does it stink or not? So, and you can see 0 is the least secure, 100 is more secure. So this particular token has a score of 0. Okay, and it says overall risk is 100%. Okay, so it's a fake token, total ownership, centralization, access control. Okay, so, and also when it says token security detection, it said too high risk, contract source code is not verified, and this is a fake token. So, this is, you can check yourself, right? And, ask, you can, interact with the blockchain, having a look, what is this particular token? What is this particular contract? And you can find often, like here, it took literally, it took 30 seconds to see this, and then I send this guy a message saying, look, don't touch it with a barge full, it's a scam token, forget about it. Just pull that slider, where is it? Pull that slider across so you don't even see it in there. But unfortunately, there are a lot of these scams going around, and especially as crypto prices start going up and the excitement creeps into the arena, you're going to have more of this, not less. Okay, so I wanted to make sure that you're all aware of this, and you are ready in case you started seeing these tokens appear in your portfolio. Especially now, you wouldn't see this if you had a Binance account, or a Coinbase account or something like this, but you do see them on decentralized wallets, because obviously Binance, Coinbase, and all this don't normally filter what goes into their platform, and they wouldn't let tokens like these onto their platform. But your wallet is decentralized, so there is nobody, there is no customer service as such. It is your wallet and it is your responsibility. So if you have this applies to any decentralized wallet, whether it's a physical one like Ledger or Trezor, or if it is a hot wallet like Exodus or Atomic Wallet or any other, or MetaMask or Rabby or whatever it is on another hot wallet, it's the same thing. You will receive these tokens, but just if you haven't bought it, or if you don't know where it comes from, do not do anything with it. Do not investigate. Do not deal with it. The only thing that you can do is just copy the token address and go and have a look at it on chain. So obviously this is the scan for Ethereum. if your token was on, I don't know, Cardano or Solana, go to the relevant software to look at the Cardano blockchain or the Solana blockchain or the Bitcoin blockchain or whatever it is. Each blockchain has its own scanner, blockchain scanner. So you can go and check any single account, any single transaction, any single token that's built on those blockchains. Okay. Any questions? Any questions on this? And please also use whatever is available in the community. You know, we got Jonathan, that is an expert, for example, of obviously of Cardano, but not only that, but you know, I think he understands saying these things because he works with it every day. So if you have any doubts, obviously you can ask me, you can ask Jonathan, or you can ask anybody that's got like relevant experience to understand these things maybe a little bit better than you. It's no shame to ask if you're not sure about something. I'd rather you ask me before this becomes a problem. Okay, this is a problem where you start interacting with some of this, and then you say, well, you know what, these things on chain, these decentralized wallets are no good. My wallet was drained. Yeah, I know. It's generally speaking, we are the biggest security risk for our assets. And most of the time, most of the scams work because we let the scammers access our funds, not because they are brilliant hackers that get into your system, or simply because we give them access to our system. All right. Any questions? Any questions about this?
Oh, discount. I think it's PI.
So is that Kim? Can he? Can somebody go in PI?
Oh, sorry.
Just all right. I thought that was the famous investigator, Magnum PI. Okay. Close this. Let's have a look at a couple of news. So this is fairly big, although it probably wouldn't have been reported widely yet. But because this is not a law. Okay, so the US Federal Reserve has announced a withdrawal of its guidance that discouraged banks from engaging in crypto and stablecoin activities. Okay, signaling a shift in crypto rules. So this change could pave the way for more traditional financial institutions to explore opportunities in the digital asset space. Now, this is absolutely massive, and this is what the SEC has used for the past 4 years to keep crypto down. Okay, because there was no law that could be appealed. There was nothing really in writing, just like guidance, just like suggestions, so to speak, from the SEC towards the bank. Like, if you don't want, bad shit happening to you, you will do this. But there was no rule in place that could be challenged. Okay, so this is big because it would say that it's not seen as a cloud on the name of your bank to engage in these kind of transactions. Okay, and that's particularly big. Just if you remember a couple of years ago, all the problems that there were with the so-called crypto banks. Okay, banks that engage in sort of like crypto activities, and the problems, even some of these banks, they even overcapitalized that they had, simply because not even doing crypto stuff, but even just allowing banking facilities to crypto companies. They have been pretty much, many of these crypto companies have been debanked in a way, so like denied banking facilities. So this is a big thing because they're not only saying that, well, it's become normal, but it's saying, well, you know what, if you are like a regional bank, you can have some new products that you think of where people maybe it could be entering as well like into DeFi, because a bank really could be offering to have like DeFi connected products to its customers, you know. If this is when you're talking about stable coins activities, you know, we're talking with Jonathan last week when we about the you know some of the pools that exchange you know two different stable coins. They offer returns you know well above 20%. You know, so that compared to traditional finance, you know, you find a you know a savings account that gives you 20%, and then I'll snap your hand off. You know, but that they just don't exist. So the ability of banks to engage in this, and I mean again, it's not something that will show up in crypto prices tomorrow, but over time that means there are going to be new entrants that do novel things with crypto, with more importantly novel funds. So there's kind of new funds that will be coming into crypto because now there is like a trusted, although I know that crypto is supposed to be kind of like remove the element of trust, but unfortunately, a lot of the funds in the capital is held by so-called trusted institutions. Okay, so the fact that these trusted institutions can then engage in crypto and make money out of it means it kind of like removes some of the barriers that have been in place to stop some of these like famous institutions for losing power. So now you see BlackRock and Fidelity and you know other big powers you know engaging in crypto ETFs and other things like this, you know. So this is a kind of a significant turning point for the future of digital assets within the US financial system. Okay, so it's a more open approach to integrating crypto and stablecoin activities into the banking sector. So the first thing that this could change, for example, is in you know moving funds between banks across the world and across the same country. You know, so they're removing first of all a matter of speed and also cost. I just compared this to the SWIFT system. And it could be already make a big difference both for banks because then they'll keep more of their profits, but also for users that they will bring the cost of international transfers right down. And think about you know not even banks, but think about companies like Western Union that are made a business out of moving funds from A to B and charging huge amounts for that privilege. And they can be completely taken out of business in a way because people now can send, you know, even with the from in the near future from their own bank account will be able to send crypto across to any part of the world with very little cost. So that's a kind of like a interesting. And that's another again things that's making its way through the system again. So there are a number of ETFs. You know, the moment we got Bitcoin ETFs and Ethereum ETFs, and there are a number of other ETFs that are in the pipeline. So they're saying that the SEC has delayed a decision on spot ETFs for Polkadot, Hedera, and they combined one for Bitcoin and Ethereum. It doesn't mean that they're not going to approve it. It just means it's going to take a little bit longer. And there are things on the pipeline. It should come before this. So we already know of Litecoin ETF that should be very close to hitting, hitting the markets. And also there have been things in place. There are filings for Cardano, Solana, XRP, and even Canary Capital has filed for Tron ETF, even Pengu and Sui, and there have been kind of Dogecoin, Aptos, lots of different Avalanche ones. So we might have, you can see here, 72 crypto-related ETF, sitting with the SEC awaiting approval. Okay, so you can see here, you know, how many different ETFs are waiting for approval, kind of like XRP, Solana, Litecoin, etc. So there's plenty of different one. Some of them are also kind of like a bit more esoteric, so to speak. So we have even like a Trump coin ETF proposal, even a Melania coin ETF proposal. So we'll see. Obviously, I mean, probably if they go, and there will be some people who will buy that. Who knows? But on a more serious level, you know, things like Solana, XRP, Cardano ETFs, you know, Litecoin, all the traditional BNB. So there are some Chainlink, Polkadot. So it could open the way for some of traditional funds to hit the crypto market from a because there's obviously, if you're in this room, probably you can just go and open your Binance account and buy any of these coins. But there are many people that are still kind of uncomfortable with all this. So we rather do it from with somebody else taking control, and kind of like they would rather trust a market, a regulated market, like all those products. If when they are launched, you know, they will be on the either on the Nasdaq or on the New York Stock Exchange. So it is like what we already seen with Bitcoin and Ethereum. They have attracted considerable funds now since the launch of the ETFs. Similar thing, it's a smaller proportion could happen with all of these other funds. And I wouldn't be surprised if some of the new ETFs, when they get launched, like Solana or the Cardano one, may even surpass the Ethereum ETFs in terms of invested capital. Now, let's have a look on a couple of things on, first of all, as we're talking about ETFs, let's have a look at CoinGlass, and we'll see what, this is the Bitcoin ETF overview. We can see now we've reached like 35, almost 36 billion that have been invested into these ETFs since the launch in January. In total is almost 40, but that includes the ones that were already present before the launch, like the Grayscale trusts were already in existence before the launch of the ETFs. Now, if we see the last couple of weeks, we've seen this number hit green again. So we've had a down a drawing period where ETFs have seen an outflow for a while, and now the money has started pouring in again. And we can see the last couple of days, you know, this week it was like 380 million. Monday was a bank holiday, obviously. It was Easter Monday, but then we see 381 million on Tuesday, 900 million on Wednesday, and 900 million on Thursday. So it's its funds are started to accumulate again. So there is, you can see here in a graphic level on was that beginning of April, the funds have started being withdrawn from the Bitcoin ETFs, and then here now from the 14th of April, then accumulation again. In the price doesn't mean the price follows straight away. So there was been a period of accumulation, you know, when the price was still going down. Okay, that tells you something. In terms of Ethereum, let's go and have a look at Ethereum. Okay, Ethereum is a little bit more of a mixed bag, so it still hasn't quite kind of like come out of the water. We're starting to see some green numbers, but we're still like pretty much. It will end up with a positive week, but not by a lot. And again, from the beginning, from when the Ethereum ETFs were launched, we now accumulate like 2 billion. Compare that to the almost 40 billion in Bitcoin. This gives you an idea of the difference in weight. So, and we can see here as well that from the beginning of April, it's been like a bloodbath in Ethereum ETFs in a way. And only recently we started seeing green again. So you can see the yellow in this bottom right corner. Can I make any bigger? No, I don't think so. Okay. Anyway, can you see the yellow line? That's the price. So you can see that you know, it went from in February where Ethereum was over $3,000, you know, all the way down to basically halved over like a month and a half, and now it started to recover from about $1,500, and it's now about 1,800. In terms of prices, let's see where we are. Okay, so what I was telling you the last time we saw each other is that we were into like a range, which is this one between this demand zone, which is the green area, and the supply zone, which is the red area. Okay, now as you can see, this demand zone was respected almost down to the dollar. So the price went all the way down to the bottom of the zone, and now then has recovered by from 75 to 95. It's a big chunk of cash. So we're talking about over 20%. Let's measure it to be precise. 27%. At the moment we're sitting now at about 26. So not a bad increase if you listen and you don't just come to these sessions for the entertainment. But I'll show you also how this works. I'll put my reputation on the line. For me, the way I see it is now that we have closed above this supply zone, and as long as we finish the week today, above this zone, I believe that there isn't anything here in the previous price action that can be considered as a strong supply. That means that the next step will be to create a new all-time high. Obviously, it won't be tomorrow. It will take a few weeks for that to happen, but I don't think there's any big obstacle in place for that to happen. And the interesting thing as well is, as you see now, within this supply zone, you can see I'm creating now a demand zone, because this is what the price action was telling me, which is let me take this away because this is kind of confusing. It was relating to the price action down here. But okay, so you can see here that price approaches the supply line, the supply area where it's expected under normal circumstances to find selling pressure. Okay, so the moment that we move outside of it, okay, up here, and there is price stays above this zone, then we have a nice demand zone, which is, when you think about, just put about in terms of pressure. Okay, so if there is pressure down in this area here, okay, so as price gets up here to the top, there is selling pressure down. It means to break this, there needs to be some momentum behind it. Okay, so when price moves from 91,000 to 93,000 and above, you need considerable momentum, considerable strength behind it to be able to do that. So that tells you one thing, that becomes a very good place where to buy again if price gets back there. And what did we have? So the price made the breakthrough on the 22nd of April, which was like Tuesday. And then we revisited this area, just about touched it yesterday morning. And so that would have been a very good place to buy with a limited risk. So it'll be 91.7 to 90,900. So it's about $800 of risk, and it's already would have made you. So you almost already would have made you three times the risk. Okay, at the moment we're sitting about 2.6, 2.7 times the risk. Okay, so they always remind you when you're buying anything, and this is not, obviously this is like a little trading session that I'm giving you, but even don't think about trading, think about investing. Always think about your investment returns in relation to the risk that you're taking. So in this case, my risk is I buy when price goes back here and I close the trade with a loss, the price gets below this point. So that is my risk. Okay, if you buy one Bitcoin, that risk is $700. Okay, $800, sorry. So that's the risk that I am taking. So the return that I'm looking for, it's in relation to the risk. So then you determine in your investment plan, you will have rules that say when you buy anything, especially when you're talking about, in this case, this is, Bitcoin doesn't pay any dividends. So this is just, will go into, even if it's a long-term investment, it will be in your growth bucket. Okay, so if you're taking a risk of $900, $800, at which point do you take profits? Okay, when you make three times the risk, 4 times the risk, 10 times the risk, this is something that you'll decide. But it makes life very easy if you know that you take a particular risk, knowing that you want to, the aim is to have 3 times the level of risk that you're taking. And that, in this case in particular, we've been very quickly. Could have done it yesterday morning, and less than 24 hours, you would have made 3 times your risk. Okay, if you had that goal. If your goal is to make 10 times your money, then you still have this open. So you still be in that position with, you are 2 times above your risk, but if price all of a sudden ended up below this point, then you will still notch up a loss. So you need to think about, with any investment, what risk I am taking and what is the goal that I'm trying to achieve. And that changes as well in terms of your result over a long term. Okay, so if you aim at, for example, 1-to-1, you risk 800 to make 800, then you know that you need to have a success score of more than 50% to actually be profitable. If your risk is 2-to-1, okay, so you risk 800 to make 1600. Okay, you don't need to have a success rate of 50%. What do you need to have? You need to have a success rate above 40% to be profitable. If you are on a 3-to-1 basis, it means that let's do it here just to make it a little bit clearer. Okay, 1-to-1 equal. Okay, if you do, okay, win-loss. Okay, win-loss. Okay, equals 50% break-even. Break-even point. Okay, 2-to-1. It means you can have loss, win. Okay, so you can have 2 losses and 1 win. What is your break-even point? So when you win 2. So it will be like, in this case, -1 plus 2. Okay, so your break-even point is 33%. If you aim for 3-to-1, okay, so you risk 800 to make 24 hours to 2400, you can have 3 losses and a win, and that will be -1 plus 3, because when you win 3. So what's your break-even point now? It's 25%. That means that depending on the setups that you have, so if you follow these rules for all your investments or for all your trading, for whatever you buy, it also determines how successful you need to be to be able to be profitable. So if you use this strategy, for example, 3-to-1 for all your trades or for all your investments, you know that you with a success rate of 1 out of 3, 33%, you'll be very, very profitable. Okay, so just get that in your mind. You are wrong 2 times out of 3, and you make loads of money. Does that sound good? Okay, so that's the reality of when we invest or when we take a risk. In any case, you always have to have, what's the gain that I am aiming for. Okay, and if that makes sense from your point of view, there might be a perfectly good investment, but it doesn't meet your rules, then you can discard it. Okay. Let's change this to get it back to what it was. And by the way, a trading view is really good. You can set this up very easily with templates to do what you want. So if you, for example, in this case, if you wanted just to show 1-to-1 and 3-to-1, you can set that up. If you want this line to be 5-to-1 or 10-to-1, because this is what you're aiming for, you can get your chart to do exactly that. And this is the risk that you take, and as you adjust the risk, as you can see, your targets change as well. Okay, so you can, the trading or investing, there are 2 things. One of it is when you sell, but the other one is also when you buy, because this can be very different. If you bought Bitcoin, let's say at this price, you can see how it changes the targets as well, because now the risk is much larger, and also to get to your rewards, it will take longer. Okay, so in terms of expectations, let's go back to the long-term charts. Okay, in terms of expectation, as I said, now as long as we close today above this area, I believe that we will hit a new all-time high before long. Okay, now this is Bitcoin. Other coins haven't quite followed through as much. So you can see this is Ethereum. We are seeing now some signs of life, but we are kind of like far away from being, from seeing a healthy chart out of Ethereum. And remember that Ethereum is the base for many other coins that we see in our list. Okay, so many of the platforms are based on Ethereum architecture. Okay, whether you like it or not, that's the reality at the moment. Okay, so the Ethereum chart, in a way, can be taken as a proxy as well for the altcoins, chart. So that's the Ethereum, the weekly Ethereum chart. So this was all the way the all-time high, which was almost like $5,000. At the moment, we're sitting at about 1,007. So just put things into perspective. We have now, a few weeks ago, beginning of April, Ethereum went below the all-time high had in 2018. Okay, so we have gone back. You could have bought Ethereum back at 2018 prices, really, a couple of years ago. Now, whether it's a good investment or not, there's a long discussion to have about Ethereum and the future prospects. But at the moment, as we'll see, if we go up and see the this chart, which is the others chart, so it means the chart to the top of all the cryptocurrency coins, excluding the top 10. As you can see, it's similar to the Ethereum chart, slightly different, because in 2024 almost reached a new all-time high, but not quite. Okay, so Bitcoin made a new all-time high we're sitting now over and about 50% above the all-time high from 2021. You can see this is the rest of the market. Okay, so if you bought any small coins as an investment, they haven't done so well. So they've gone down like 50% from not even from 2021, but from the 2024 high. Okay, but the other thing that's interesting is that, okay, from where we are right now, we're not too late. So there's still time to invest in crypto. We are not late by any stretch of the imagination. So the moment it would have to double, the price would have to double to just simply get back to 2021 levels. And this is the general market. Okay. So if we think of, again, we're thinking about where is Bitcoin? Bitcoin has gone from 70 to 110, so basically 50% higher than that. Where is that 50% higher point in here? Okay, so let's have it here. 50%. 210% from now. Okay. So here obviously this is not investment advice, guys, okay, but just to have some musing, some calculations like this. So from a technical point of view, when the crypto started picking up again, so at the end of 2022, we're seeing this pattern being generated. So like a long-term pattern is like a bullish pattern. Okay. Now, as long as we don't go back below this point, which would be an extra 40% drop from where we are right now, we are still in that bullish pattern. So the expectations is that we are going to have like similar measured move like that we had over here. So this should be the next the next step, and that should take us back to 482 billion, which is pretty much double where we are now. Okay, so the expectations is that the next move at the very least is going to double the value of the altcoin market from where it is now, and even that wouldn't even take us all the way up to a new all-time high. Okay, so there is a lot of room to grow, and we still haven't seen anything like we saw in 2021. Okay, well, I mean, this is not expecting to see the same thing because it's a more mature market, but still that was 1,200% in 2021. Okay, it took about a year. The initial thing was about 1,000% and then an extra push in November. But should we have anything approaching that right now, it would be wild. So we are talking about doing about four times where we are, where we are now. I'm not expecting this much, but I think at this point here, it's achievable. Okay, so we are talking about we are now 240 billion 660, so it's about a trebling actual price of the altcoin market, excluding the top 10. Okay, so finish playing around now with coins. The interesting thing to see before we move on is to show how Bitcoin. Let me just remove this. Let's change that as well. How Bitcoin seemed to have decoupled from the share market. where before it used to go up in the same way. Now, is that compared to the strength? Just a second. Okay, so that shows you the relative strength of Bitcoin compared to the S&P 500. Okay, and you can see that as in the over the past few days, you know, is gone up quite significantly. So that means that the Bitcoin has been a lot stronger than the stock market. It's kind of like a retreating a little bit over the past 2 days. Yesterday, because yesterday, you know, we had a kind of like a boom in the share prices that have been depressed for a while. But if we compare this, we can always do that on TradingView. We go now Bitcoin here. We can have the S&P 500. Scale. So here it's interesting to see, you know, that over the past 3 weeks, as the stock market pretty much stood still. See, there's nothing, you know, we go all the way. Just look at the last. Okay. So if we look at, sorry, you look at here, we had the stock market went up by 0.5%, Bitcoin to up by 22%. Okay, over the same time. So that means that for the first time in a while, so there always been like a very high correlation between Bitcoin and the stock market. Now that correlation seemed to have changed over the past few weeks. That means that there has been some of the, so what does it mean in practice? Is that some of the sell-off from stocks and shares has been invested in other asset classes, and part of it's come to Bitcoin. Where has the other part gone? Anybody can guess?
Gold.
Gold, exactly. So if anybody has paid any attention to the chart of gold, yeah, that kind of tells a story, doesn't it? Look at this. Gold prices, you know, zoom up to new all-time high, and the stock market goes down. So that means that there is, and this is an institutional level, so there are some countries, I think for me, they're selling the US dollar reserves and buying gold with it. That's because there's no other reason for something, an asset like gold, which is not a speculative asset, you know, for going up, you know, 27% in 3 months is just like it means like a tectonic shift in something. And obviously me and you don't have the funds to be able to create such an effect, but that means that, you know, gold is very much in vogue with central banks and big countries like China that might be maybe selling off they reserve US dollars and buying gold instead. So we might be even coming close to a BRIC currency. Who knows? Because that, if there is such a thing as a BRIC currency, that will be supported by gold. So yeah, let's see. But be aware of these movements, because these are big moves. They're like, you know, happen once in a lifetime, really. All right. Do we have any questions? I got 10 minutes left. You awake?
Hey, Luca.
Fine.
Not so much crypto related, but I was interested by your last comment there. So BRICS would be based on gold, backed by gold, and my mind then leaps to the petrodollar, and does that whole picture change as well?
Well, yeah, obviously, because I mean, the thing is that okay, there could be a BRIC currency. And, it's been talked about, although it's not, the idea that the BRIC currency will take the place of US dollar is ridiculous. But the idea that we can use something else rather than US dollar to settle international trade is very real. And that's called Bitcoin. Because the idea of having the dollar, it means that some dollar for international trade is that somebody is in charge of all that value that it's used for international trade. Because remember, the currencies are just like a tradable good. There's nothing else. So it's a tradable good that instead of having a direct use, like if you buy, I don't know, a sandwich, you can eat it. Gold instead, a currency you just have because it helps you to buy something else. It facilitates trade, but it is an item that you buy. It could be on the shop floor. You go out and buy dollars with your pounds or with your Swiss francs. It literally could be in your supermarket. You pick up a bunch of dollars, then you go to the till and pay for it. Because this is the thing. Most people don't realize it, but currencies are a good, to exchange. But think about how much easier would it be if you went out to buy, let's say, oil from Saudi Arabia or something like that, from whichever country, you pay in your own currency, and Saudi Arabia receive whatever currency they want. And this is what Bitcoin is, because you buy Bitcoin with your currency, you complete, and that happens in minutes, and then you use that currency to complete the trade, and then Saudi Arabia on the other side, they can exchange Bitcoin for whatever they like. So from the point of view of international trade is a solution that gold has been for thousands of years. Okay, so the idea that using gold for trade is because it's equally as difficult to obtain gold in China as it is in the US or in Mexico or in other countries, and it's valued the same all the world around. So it's a fantastic means of exchange. But now the trade is a lot faster than that. Settlements in gold are not practical, because it will literally mean having to shift chunks of gold from one country to the other. So it will take at the very best days, if not weeks, where Bitcoin, another cryptocurrency, can facilitate that transfer in seconds. Or say maybe minutes in the case of Bitcoin. I don't know how long it takes to have a finalized transaction. I think is a few hours, but it's still, compared to several weeks, I think is a big improvement. And going forwards, it can, the speed of it can be improved as well. So Bitcoin is still working at 7 transactions per second, by the way. So it's not quite right to facilitate every transaction. That wouldn't be practical either. But there are other solutions coming on board that can do that. So that's a big shift that we could see using cryptocurrency, whether it's Bitcoin, Ethereum, Cardano, or something else, as a mean of settlement for international trade. And I believe that we could probably see that in the next few years. And this is why you see all the banks closing ranks and moving into that very profitable area. Eric.
I heard that because the tariffs between America and China, China does not buy soy in America anymore and buys now all of it in Brazil.
Mm-hmm.
And as far as I remember, they said the trades will not be handled in dollars.
Mm-hmm.
I'm sure there's a lot of trades between China and the BRICS states not in dollars, just not being talked about, because Trump once said if somebody's trading following the BRICS rules, he puts 100% tariff on it. So it's all done quietly.
So yeah, no, that's very true, and that could cause the demise of the United States very easy, because that trade is already happening. So there have been examples of Russia and India exchanging oil for Bitcoin. It's already happening. It's already happening. So it's not new, and this could be a reason. Like we've seen the dollar losing about 10% over the past few weeks. And as I said, it's a good. So people to buy oil, to buy other things, they have to buy dollars to complete the exchange. If they can do without the dollars, then the dollar will have less demand, and so it will go down in price. As simple as that. Then if you say, Trump's tariffs will only have an effect on other countries as the trade with the US is important for them. If they go another outlay for their goods, if Brazil can sell their stuff to China or Japan or something else instead of the US, who cares? Who cares about the dollars? And that's it. That's the reality. It could happen. It's still far away. It's not something that could happen tomorrow because there's no other currency that could replace the dollar at the moment. But on a long-term basis, it could definitely happen. Could be a shift away from, and I can see as like inevitable, to be honest with you, because I'd rather have something that nobody's in control of, like a cryptocurrency, that it's ruled by code rather than by somebody making a decision. Because the America has been living on credit cards pretty much, because of the dollars is used somewhere else. Why should we give them that power over us? We could very simply use other things and do better things with that money than giving it to the US. Anyway, guys, this is the last question, as I've got another coaching call starting straight away now. So just remind you, I'm going to be away next weekend, so there is not going to be either session, either the crypto hour or the AAW long-term wealth. We start again in 2 weeks' time. Okay. In the meantime, have a nice break. If you're in the UK, there's a nice couple of bank holidays as well. One bank holiday coming, one more. And if you're not, I'm sure that there are some other holidays that you can look forward to. All right. Have a great weekend, and I'll see you again in a couple of weeks' time.
Yeah. Thank you, Lucas.
Thanks.
Bye.